Welcome back to another video on the Finance Forest YouTube channel. Today we're going to be looking into Forex trading and how you can potentially make lots of money through the RSI indicator. So if you are new around here, then please do subscribe. Please like the video if you do enjoy, and let's get into it. So I'm hoping that at the moment you currently have a bit of knowledge as to what Forex trading is. Now don't worry, if you don't know what it is, then I will give you a brief explanation. And for the experienced guys, if you do want to skip the next 20 seconds or so, then you're more than welcome to, so you can get straight into the strategy. So Forex trading is similar to buying and selling other types of securities like stocks. The main difference is that Forex trading is done in pairs, such as euros to USD, which is what you can see here, or the Japanese yen to the British pound. When you make a Forex trade, you can sell one currency and buy another. You profit if the currency buy moves up against the currency that you sold. Okay, so what we're going to do is I'm going to show you a strategy that many people use, and one that I've used quite oftenly to make myself money through Forex trading. So as you can see, currently we are here on Trading View. We have the euro against the USD, and that is the most popular currency that is traded across the world, and we're currently on the 4-hour time frame. So we're going to stay on the 4-hour time frame, but what we're going to do is come over to indicators, and we're going to search for the RSI, okay, and that means relative strength index. Now the relative strength index shows the strength of movement and shows momentum within the pair, and I'm going to show you what I mean now. So once you open that up, you will see a graph that opens up at the bottom here. And you can see we've got two different levels. We've got 30 and 70. Now, a lot of people trade the currency depending on where the currency pair is. So 30 basically means that the market is oversold, and 70 is overbought. So what you would do is, if the currency was down at 30, you would buy, okay? And as you can see, if you bought there, it went up and up and up and up and up, and you would have made, really good profit. Let's just have a look at the pips that you would have made. So if we bought around here, and let's just go up, you would have got about 128 pips, which is, just fantastic. But essentially, sometimes it can go wrong. That method doesn't necessarily work. So as you can see, people potentially could have bought around here, expecting it to go back up, but it went further down. So what I'm going to do is I'm going to show you a little trick of how to avoid this, because even though potentially it's gone down to 30 and the market has been oversold, you might then be thinking, oh, I'll buy in, and it won't go down, it'll just go straight back up again. That is not the case. It can potentially go further and further down, and I'm going to see if I can find another example of that actually. Yeah, so here's a great example actually. So comes down, okay, so round about here you'd be thinking, okay, maybe potentially I need to buy, and it goes further on down, goes up, and then further on down. And you don't want that to happen, because that's where potentially you're going to be losing a lot of money. And to be honest, yeah, fair enough, this is a momentum indicator, but you want to avoid losing money. So here's a little trick of how you can avoid that. So on the RSI, you can go to settings, and here you have a little bit of a display, you can edit your HUD as such. So we're going to change all of these numbers to 50, okay, and the middle band we want as like a red line with the highest thickness, and we want the line to be a straight line, okay. So what you would do now is, every time that this pair gets to let's say the middle, so as you can see here, you go down, and then essentially once it's slightly past the line, you would then either buy or sell. So let's say, for example, if the trade is going up and you can see it's just going past the line, you would buy. But if it was going down, you would sell. And this seems to be a lot better for me. So what we're going to look for is a position to be able to buy into the currency. So as you can see, it's been on a little bit of a downtrend here, and it's continuing through the line around here. So we'd look to buy in probably here to follow the momentum upwards. And if we did, we'd be looking at a good amount of pips. Now that's calculated out. So let's say just on this peak here, we bought in. Okay, and let's just move that up there. We'd be looking at about 194 pips, okay, which is very good. Now let's have a look at a sell position. Let's see what we can do for a sell position. So let's have a look. Okay, even if it was around about here, okay, we can see that it's not really moved a lot, okay, but let's say if we bought even still here, because we can see it's pushed through the line. Let's get the pip calculator and let's just draw the line from the top. So let's have a look. Just keep going down, and it'd be 164 pips. So it is a very good strategy for you to be able to make money by buying or selling the pair. And it's proven to work a lot of the time, okay? Most of the time this will work. And I want you to give it a try if you can. I really do want you to give it a try because it's worked for me, it can work for you. And as you can see, every time this purple line goes over the red line, you know, you're either getting a really good spurt, and then when it comes back down and it goes through the lead line again, you know that you want to buy when it goes through upwards and you want to sell when it goes through downwards, okay? So follow those rules. I'm not an expert. This is not financial advice, but it does definitely work, and I've proven it today for you. You know, when you're trading Forex, you've got to be strong. You can't be weak when you, you know, put trades on. You have to be patient as well, because let's say, for example, in this position here, you might have put trade on, but as you can see, the momentum isn't really going anywhere, and you have to look for common trends. The RSI isn't and shouldn't be your main factor when it comes to Forex trading, but it can be a very good strategy to use just by itself. But as you can see, in some cases, it doesn't always work. So you have to rely on other things, you know, for you to rely on. So, you know, for example, here in the chart, you can see there's been a massive downtrend, and it's really below the line, and it's going up and it's going up and it's going up, and you just know that it's going to break back up to where it was, and the momentum is very strong. Whereas over here, if you see that it's bouncing up and down across the line, that's not where you want to put a trade in, okay? And I hope you guys understand that. You know, this line is your barrier. If it's gone down and it's going to come back up and come back up and come back up, then great. But as I said, do not put a trade on until it's broke through the line, okay? Now, I want you guys to try this out. I want you guys to give me your opinion on this strategy. Is it something that you've used before? If it is, let me know down in the comments. Is this something you're going to give a try? Because I've definitely made thousands of pounds from doing this. So I want you guys to give it a try. Let me know down in the comments what you think. This has been a very exciting video, something that I've wanted to make over the last couple of days for you. So I hope you did enjoy. If you did, let me know. Thank you very much for watching. Take care, and we'll see you in the next one.